Investor recognition of General Motors and Ford's efforts to shift to electric vehicles has resulted in a surge in their stock prices this year. However, Wood notes that the legacy players are not accustomed to manufacturing electric vehicles because they were raised during the industrial gas-powered period. The installation of infrastructure for charging stations and the sales of electric vehicles are growing quickly because of growing consumer demand, more readily available automobiles, and government support. Consumer spending on electric car purchases reached $120 billion in 2020, a 50% increase from the previous year. This corresponds to a rise in sales of 41% and an increase in average prices of 6%. Woods emphasized that, because to its technological decisions, Tesla is already well ahead of its rivals in controlling the electric vehicle industry, and will do so going forward. Between now and 2024, General Motors plans to invest $6.6 billion in its home state of Michigan to increase the production of electric pickup trucks and build a new plant for the production of electric vehicle battery cells. General Motors plans to enhance its capacity for producing electrified vehicles in North America to 1 million units by 2025, which includes this increased expenditure. General Motors anticipates surpassing Tesla as the largest U.S.-based seller of electric vehicles by selling more than 1 million of them globally by the middle of the decade. Not too far behind, there are other automakers like Hyundai and Ford, although it will take some time for them to catch up. Apart from its pioneering role in the electric vehicle sector, Tesla stands apart for a few reasons. First off, since Tesla's batteries are thought to be better than those of rivals, the company's distribution network for batteries plays a major role in its competitive edge. The excellent quality of Panasonic's battery cells is partially to blame for this. The explanation is straightforward. The automobile's range varies according on the model. Up to 412 miles can be covered by the Tesla Model S. Among non-luxury vehicles, Ford's Mustang Mach-E extended range model is the closest rival. The Tesla Model 3 and Model X come next, respectively. Wood said that it would take some time for other OEMs to catch up to Tesla's speed, because, for the majority of automakers, sales of electric vehicles only account for 2 to 3% of their total revenue. In order to increase those figures, a complete overhaul would be required, which would require a significant investment of time and money. In the meantime, Tesla continues to make technological and sales advancements. If Tesla is the first company in the U.S. to successfully introduce autonomous vehicles, we are starting to think that in 5 years, Tesla might not only capture the largest portion of the electric vehicle market, but also 20 to 25% of the entire auto industry. According to Wood, Tesla's stock, which is already trading at $1,089, is predicted to reach $3 by 2025. She thinks there is a 50% probability that Tesla's attempts to develop autonomous driving will be successful, and that this is the most important factor in getting Tesla shares to reach her target price of $3,000. According to her, the ability of autonomous cars to carry passengers to their destinations would take precedence over design when they operate in autonomous taxi networks in the future. We think the cost of electric cars will eventually approach that of gasoline-powered cars. Our present projections indicate that by 2026, the average electric vehicle would cost approximately $15,000. In response to a listener's question, Wood stated that Lucid Group, Riverside Automotive, and other electric vehicle firms do not pose a threat to Tesla. Although she thinks businesses can be successful in the space, she thinks Tesla batteries are 3 to 4 years ahead of their rivals. She also notes that neither business is focusing on autonomous driving, an area in which Tesla can stand out. Wood also raised concerns about Tesla's response to the scarcity of chips. Due to a shortage of computer chips, well-known automakers like General Motors and Ford Motor Company operated differently than Tesla for a large portion of last year. Dealer lots remained barren and automobile prices increased as a result of General Motors and Ford closing one facility after another, often for months at a time. Notwithstanding the industry-wide crisis, Tesla managed to break sales records on a quarterly basis and concluded the year with almost twice as many sales as it had in 2020. Tesla is poised to overtake Apple as the company with the largest revenue share in its industry. Because Apple was nowhere and had developed its own processor, Cathie Wood anticipated that the company would recognize a cell phone as a computer far before Nokia, Ericsson, and Motorola would. It created its own chip, which is why it still makes the most money in the cell phone industry. The share price may have decreased, but its value has climbed, and we think Tesla will have a similar outcome. In a prior interview, the financial whiz said that many investors and financial experts consider Tesla more as a technology company than a car manufacturer. That is, at least, the explanation given for the company's stock price's explosive rise of over 300% in a single year beginning in 2013. There are several parallels between Tesla and the technology industry. Tesla has adopted the disruptive slogan of the I sector. Similar to other tech firms, Tesla is trying to pen the automotive industry's long-standing business models by selling directly to customers. Its founder and product pipeline have a devoted following, akin to popular tech companies like Apple. As technology equities were hit by rising bond yields in anticipation of Federal Reserve interest rate increases, Tesla's stock plunged 31% from January 3rd to January 27th. However, in a presentation, the company has since rebounded by over 11%. Wood stated that investing with a long-term perspective is the most important thing to remember. We have a 5-year plan in mind. To begin with, I have never seen an invitation of this caliber before. Regarding Tesla, a lot of analysts are optimistic for 2022. For instance, a bullish analysis of the company was published by a Goldman Sachs analyst, who rates it as a buy and describes it as the undisputed leader of the EV pack with a target price of $1,200. Wedbush Securities' Daniel Ives is also positive, estimating a target price of $14,000 and a best-case scenario of $18,000. Wedbush has rated the firm as outperforming, stating that Tesla has skillfully handled the 2021 chip shortfall and that there is still market share to be taken by electric vehicles. Tesla is impacted by both positive and negative factors, and the way the stock performs in 2022 will depend on how things go during the year. Elon Musk might need to stop selling stocks and concentrate more on getting the Cybertruck launched. Estimates indicate that China is a sizable market for Tesla and electric cars in general. By 2022, 40% of Tesla's deliveries will come from China, which will raise the company's stock price by almost 400%. If the Chinese market is handled well, Tesla might see rapid growth. In the event that China's plan is successful, experts predict that nobody will be able to prevent Tesla from reaching a new peak in 2022. Do you agree that Woods will have 25% of the market for Tesla's electric vehicles? The following Apple comment is underneath. It's no secret that the decreasing prices of Tesla stock are severely damaging investor morale. But before you give up, consider this. We may have some positive news that has given us hope that the worst of the storm is almost over and that share prices will soar in the upcoming weeks. What has been the recent activity of Tesla? What do experts have to say about the possibility of a decline in stock price? Will there be a quick recovery in share prices? Watch the video to find out what's revealed. It's all coming together today. 1 million or so people watch Tesla Incorporated, one of the most contentious stocks. This is especially true given that the stock price of Tesla has fallen more than 25% since early November 2021, from $1,236 to $950 on February 3, 2022, and has since fallen even more. Tesla has dropped around 3 times as much as the S&P 500 and twice as much as the Nasdaq in the past month, despite the fact that both indexes have declined dramatically. This suggests that investors are quite concerned about Tesla's near-term future pricing. Many things have made us think that, after the ongoing decline over the past few weeks, Tesla's stock may blow up the following week. The market closed at 856.98 this week, and we think an increase in the number is just around the corner. Numerous bullish signs have convinced us that a recovery is about to occur. Let's start with some practical considerations. We recently got a rare look of the production lines at the Tesla Gigafactory in Texas, thanks to videos that some employees and contractors from the company posted on Snapchat. Late last year, things started to heat up. It has also been mentioned that the plant will deliver its first new model before the end of the first quarter, probably in March. Beginning production of the Model Y at the Gigafactory in Texas is a significant milestone for Tesla's expansion, as it heralds the release of an updated electric SUV featuring Tesla's own structural battery pack and 46A battery cells. Although Tesla has not yet stated how the new architecture will impact the new model-specific specifications, such information should become available as soon as regulatory certification is implemented by the National Highway Traffic Safety Administration and the Environmental Protection Agency. With its most recent earnings announcement, Tesla had leaked a few images from inside the factory, but up until now, we had only seen a small sample. We get a unique glimpse inside the plant because of a specific employee who volunteered to give us a tour. In addition, although the necessary government approvals are still pending, Tesla's facility outside of Berlin is prepared to start producing new cars. There's no need to inform you how much market fluctuations depend on the mood and psychology of market participants. This is bound to create a stir, not to mention the issues surrounding the invasion of Ukraine. We should anticipate a ripple effect on stock market values overall as